Hello, this is the second part for chapter 2. In the first part, we did the first 7 transactions. Now we will continue with the rest. Then we're gonna post those entries to the T accounts and the general ledger. Then we're gonna prepare a trial balance. Transaction 8, collection on account. On November 22nd, Smart Touch Learning collected 2,000 cash from a client in transaction 5. So, collected cash, so my cash increased from a client in transaction 5. In transaction 5, I provided service to a customer and I recorded that amount as accounts receivable to be received later. So now the second account affected is accounts receivable. Okay, so my accounting equation is assets equals liabilities plus equity. Both accounts are assets, cash and accounts receivable. I collected cash, so my cash increased. Accounts receivable will go down because I need to decrease the balance for this customer because he paid part of the amount. So assets increase and the debit, liabilities and equity increase and the credit side. Now cash increase, so it's gonna go to the debit. Accounts receivable decrease, so it's gonna go to the credit. So which one I'm gonna start with? I'm gonna start with the debit. So cash will be in the debit, accounts receivable will be in the credit. I need to leave a space. Then I'm gonna write the amount here, 2,000. After the journal, you need to go and post those entries to the T accounts. Transaction 9, owner withdrawal of cash. On November 25th, Sheena Bright withdrew cash of 5,000. So withdrawal and the business cash decreased. So these are the two accounts affected by this transaction. The accounting equation is assets equals liabilities plus equity. Cash is under assets. Withdrawal will decrease my equity. And the business cash has decreased, as you can see. So the normal balance for assets is debit side and the normal balance for liabilities and equity is credit side. Since cash has decreased, so it's gonna go to the credit, and withdrawal will decrease my equity, so it's gonna go to the debit. So as we know in the journal, we start with the debit account first. So I'm gonna start with withdrawals, and this is the owner's name, and cash will be on the credit side, so I'm gonna leave a space, as you can see. Then I'm gonna debit and credit 5,000, and this is the description. Then we're gonna go to the T accounts of withdrawals and debit 5,000, and for the cash we're gonna credit 5,000. Transaction 10, prepaid expense. Prepaid expense means when we pay for the expense in advance. So I might pay for the rent or for the insurance 1 year ahead. So it's gonna be an asset account until it's used, because I'm gonna get the benefit from this account in the future. Let's see, on December 1st, Smart Touch Learning prepays 3-month office rent of 3,000. So prepays office rent. Okay, it's gonna be prepaid expense. It's an asset account since I prepaid, so my cash has decreased. So my equation is assets equals liabilities plus equity. Prepaid rent is under asset because it's an asset account. And the second account affected is cash because I paid in advance. So my cash will decrease and my prepaid rent will increase because I just created this account. The normal balance for assets is debit side and the normal balance for liabilities and equity is credit side. Okay, so both are assets. So when assets increase, they go to the debit, and when they decrease, they go to the credit side. So I'm going to start with the debit, which is prepaid rent. Then I'm going to credit cash, so I'm going to leave a space here, and the amount is 3,000. Transaction 11. Payment of expense with cash. On December 1st, Smart Touch Learning paid employee salaries of 1,200. Paid means my cash has decreased. Salaries, it's an expense account. Again, the accounting equation is assets equals liabilities plus equity. Cash is under assets. It decreased. I paid. And expenses will always decrease my equity. The normal balance for assets is debit side. The normal balance for liabilities and equity is credit side. Cash decreased, so it's gonna be credited. Expense decreased my equity, so it's gonna be in the debit side. So I'm gonna start with the debit. So salaries, expense, and the debit. Then I'm gonna leave a space. Then I'm gonna write cash. Transaction 12. Purchase of building with notes payable. On December 1st, Smart Touch Learning purchased a 60,000 building in exchange for a note payable. So I bought a building, but I did not pay cash. I signed a note payable. Note payable is a promissory note from my side. I'm promising the landlord that I'm gonna pay him the 60,000 in the future with interest. Okay, so the accounting equation is assets equals liabilities plus equity. I bought a building, so this is an asset account. It increased. And notes payable, it's a liability account. It also increased. The normal balance for assets is debit, and the normal balance for liabilities and equity is credit. Building increase, so it's gonna go to the debit. Notes payable increase, so it's gonna go to the credit. So I'm gonna start with building. Debit first. So building in the debit, then in the second line you're gonna leave a space, then it's notes payable. 60,000 is the amount. Don't forget to post those entries to the general ledger T accounts. Transaction 13, owner contribution. On December 2nd, Smart Touch Learning received a contribution of furniture with market value of 18,000 from Sheena Bright, which is the owner. So she contributed, but she did not invest cash. She gave furniture as an investment in this business. Okay, so since it's a contribution, so I'm gonna increase the capital, and the furniture for this business will also go up. The accounting equation is assets equals liabilities plus equity. Furniture is an asset account, so under assets I'm gonna write furniture. It increased. Capital is an equity account which increased equity. The normal balance for assets is debit, and the normal balance for liabilities and equity is credit. Furniture increase, so it's gonna go to the debit. Capital increases equity, so it's gonna go to the credit. So we're gonna start with the debit account first. So furniture will be in the debit. In the credit, I'm gonna leave a space, then I'm gonna write capital. As you can see, Bright is the owner name. Transaction 14, accrued liability. On December 15th, Smart Touch Learning received a telephone bill for $100 and will pay this expense next month. So he received a telephone bill. So we received a bill, which means I used the telephone. Okay, so it's gonna be an expense account. Okay, so it's utilities expense. Now, what's the second account? Did I pay or I'm gonna pay in the future? He said it's gonna be paid next month, so it's gonna be payable. Okay, so it's a liability account. Since it's for utilities, so I'm gonna write utilities payable. Okay, we can use accounts payable, but to specify that this amount is for utilities, it's better to write it as utilities payable. So the accounting equation is assets equals liabilities plus equity. Okay, it's an expense account, so under equity I'm gonna write expense, utilities expense, and expenses will always decrease equity. And since it's payable, so it's a liability account, so I'm gonna write utilities payable. Under liabilities, my liabilities has increased. Okay, normal balance for assets is debit, normal balance for liabilities and equity is credit. Since the utilities payable has increased, so it's gonna go to the credit side. Expense will decrease my equity, so it's gonna go to the debit. As we said before, we need to start with the debit account, so utilities expense and the debit, and the credit side you're gonna leave a space, then utilities payable. Transaction 15, payment of expense with cash. On December 15th, Smart Touch Learning paid employee salaries of $1,200. So again, paid means my cash has decreased. Salaries is an expense account. The accounting equation is assets equals liabilities plus equity. Cash is under assets, it decreased. The second account is an expense account, which will always decrease equity. Now the normal balance for assets is debit, the normal balance for liabilities and equity is credit. Cash decrease, so it's gonna go to the credit. Expense decrease my equity, so it's gonna go to the debit. We will always start with the debit account, so it's salaries expense. The second line you leave a space, then it's cash. Transaction 16, unearned revenue. On December 21st, a law firm engaged Smart Touch Learning to provide e-learning services and agreed to pay $600 in advance. Okay. Unearned revenue means I received cash in advance, but I did not provide the service yet. The revenue is not earned yet. So it's liability account. I have to provide the service because I received cash in advance. It's a liability account. So I'm gonna provide e-learning services in the future, okay? And they will pay me $600 in advance. So I received cash in advance. Okay, I'm Smart Touch Learning. So I'm gonna provide e-learning services in the future, but I'm gonna receive the money ahead. I'm gonna receive it in advance. So the first account will be cash. I received cash. And the second account is unearned revenue. It's not revenue, it's unearned revenue because it's not earned yet. I did not provide the service yet. It's a liability account. So the accounting equation is assets equals liabilities plus equity. Under assets, we have cash. I received in advance, so it increased. And under liabilities, it's unearned revenues. It's a liability account, it increased. The normal balance for assets is what? Is debit side. And for liabilities and equity, it's credit. Cash increase, so it's gonna go to the debit. Liabilities increase, so it's gonna go to the credit. We're gonna start with the debit first. Cash and the debit, unearned revenue and the credit side. Transaction 17, earning of service revenue for cash. On December 28th, Smart Touch Learning collected cash. So my cash increase of 8,000 for service revenue that the business earned by providing e-learning services for clients. Since it's earned, so I need to record revenue. Earned means I provided the service. So the accounting equation is assets equals liabilities plus equity. The first account affected is cash under assets. It's collected, so it increased. The second account is revenue under equity, which increased my equity. The normal balance for assets is debit. The normal balance for liabilities and equity is credit. Cash increase, so it's gonna go to the debit. Revenues increase, equity, so it's gonna go to the credit. So we're gonna start with the debit first. So cash and the debit, service revenue and the credit. So after recording each entry in the journal, I need to post those entries to the T accounts in the general ledger. This is the general ledger. We're gonna have a T account for each account we had. Okay, so as you can see here, assets, we had cash, accounts receivable, office supplies, prepaid rent, furniture, building, land. Under liabilities, we had accounts payable, utilities payable, unearned revenue, and notes payable. Under equity, we had capital, we had withdrawals, we had service revenue, we had expenses, 3 expenses: rent, salaries, and utilities. So now, how can we do this? Please pay attention. I'm gonna explain it to the cash and you're gonna do the rest. Now for the cash, I'm gonna post all the entries here in the debit side and in the credit side. If you go back to the date, you're gonna know what was the transaction. Now, how can we find the balance at the end? Okay, we're gonna add all the debit side, all the increases for the cash, and we're gonna get the total here. Then I'm gonna add all of the decreases, the credit side, and I'm gonna write the total here. Then I need to subtract and find the balance. Okay, total debit side was 46,100 and total credit side was 33,900. Now to find the difference, I'm gonna subtract. So I'm gonna get 12,200. So since the debit side is greater than the credit side, you're gonna write the balance in the debit side. We're gonna do the same thing for each T account. Okay, so for the accounts receivable, 3,000 less 2,000, it's 1,000 debit. For the office supplies, you had only 500 in the debit, so you're gonna leave it as 500. For the prepaid rent, it's 3,000 only. For the furniture, it's 18,000. For the building, it's 60,000. For the land, it's 20,000. As you can see, each asset account has a debit balance according to the normal balance of assets. As we said before, assets increase in the debit side, so the balance should always be in the debit side. Okay, now let's go to the liabilities. The first account is accounts payable, 500 less 300, so it's gonna be 200 credit. Utilities payable, you have only 100 credit. Unearned revenue, you have only 600 credit. Notes payable, it's only 60,000 credit. Okay, so as you can see, liabilities, the normal balance for liabilities is credit, so you should have your balance in the credit side. Now for the equity, we said 2 accounts increase equity, which are capital and revenues. they increase equity, so they should be in the credit side. So he will add 30 to 18, you're gonna get 48 in the capital. Total for revenues at 16,500. As you can see, the balances are in the credit side. Now, withdrawals and expenses decrease equity, so they will be in the debit side. For withdrawals, it's 5,000 debit. For the expenses, it's gonna be debit, as you can see. Okay, so here he find out the total assets, and here is total liabilities, and here is total equity. If I add liabilities to the equity, I'm gonna get the same answer as this. Okay, so add 60,900 to 53,800, you should get 114,700. Okay, now the third step in my accounting cycle is to prepare the trial balance. First, you need to record the entries in the journal. Then we're gonna post the entries to the T accounts and the general ledger. Then I'm gonna find the balance for each T account. I'm gonna take those balances to the trial balance. So this is the trial balance, as you can see. Company's name, then trial balance, then the date, which is end of the period. Then you're gonna list down all of your assets, liabilities, and equity accounts. Then we're gonna find total. Okay, now we're gonna put the balances only. Okay, so as you can see, assets are from cash to land. These are your assets. Liabilities are from accounts payable to notes payable. Okay, and equity accounts are here. Capital, withdrawal, revenues, and expenses. These are your equity accounts. Okay, so as you know, equity increases by capital and revenue, and decreases by withdrawals and expenses, so it's gonna be debit. Okay, so I'm gonna just transfer the balances that I got in the T account to the trial balance. Then I'm gonna add them up. Total debit should equal your total credit. So a trial balance is a list of all ledger accounts with their balances at a point in time. The assets account are listed first, followed by liabilities, and then equity. Then we're gonna prepare the financial statements. So we're gonna start with the income statement, which is revenues less expenses. Revenues less expenses. So we have only one revenue account, which is service revenue. I'm gonna subtract total expenses, which is 5,700. I'm gonna get 10,800, which is the net income, which gonna be used in the next statement, which is statement of owner's equity. I'm gonna start with the beginning capital. I'm gonna add to it owner contribution. Any investment happened during the period, then I'm gonna add to it net income or net loss. Okay, then I'm gonna subtract withdrawals. So as you can see, it's between brackets, so it's minus, it's negative. So now you have the ending capital at the end of the period, which gonna be used in the next statement, which is the balance sheet. As you can see in the balance sheet, we're gonna list down all of our assets, liabilities, and under equity I'm gonna write the ending capital only. Okay, now my total assets should equal my liabilities plus equity, which is 114,700. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.